Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Tuesday, February 15th. Stocks on Wall Street opened lower following a round of mixed economic data. The most closely watched of the reports was a reading of January retail sales. They rose 0.3%, marking the seventh straight monthly increase. But the gain was below estimates and the lowest since last summer. Meanwhile, import prices rose 1.5%, largely due to a big increase in fuel costs. Export prices also rose last month, but at a slower rate than imports. And manufacturing in the New York region showed improvement in February, rising to its highest level since June. Following the data, the U.S. dollar is declining and commodities are rising. Gold is trading at around $1,375 an ounce, and crude oil is closing in on the $86 a barrel mark.
Economic data is also moving the markets around the world. Fourth quarter gross domestic product in the Eurozone expanded 0.3% faster than in the previous 3 months. And a measure of economic sentiment in Germany edged higher, suggesting that investors there are still confident about the recovery in Europe's biggest economy. Those reports are helping to push stocks across the continent mostly higher. But in Asia, the reaction to the latest inflation data out of China was mixed. Consumer prices in the world's second largest economy rose by 4.9% in January. That was above December's level, but much lower than the 5.4% increase forecast by economists. Stocks in Japan and Taiwan reacted positively to the report, as investors showed relief that the number wasn't higher. But shares in Hong Kong lost ground on worries that price pressures in China will remain high, and that booming consumer demand will keep policymakers focused on taming inflation.
We're seeing more consolidation among global stock exchange operators. Germany's Deutsche Boerse is buying NYSE Euronext, which operates the New York Stock Exchange. The news is sending that stock down 4% in early trading. The deal would create the world's largest financial exchange if it gets approval from regulators. And it comes less than a week after the London Stock Exchange and Canada's TMX announced their own $3.2 billion merger. Turning to corporate earnings, FedEx said last night that its profit for the current quarter will fall well short of expectations. The shipping company blamed the brutal winter weather and rising fuel costs for the shortfall. That's important because FedEx is often seen as a bellwether for the rest of the economy.
A couple other stock movers we're keeping an eye on today. Sirius XM Radio is tumbling 9% after reporting a fourth quarter loss. The company's revenue and subscriber numbers were fairly strong, but higher operating expenses weighed on the bottom line. Quest Communications also swung to a loss in the latest quarter, and revenue dipped slightly. Shares of Quest are losing 1% right now. After today's closing bell, we'll get reports from PC maker Dell and semiconductor firm Analog Devices. That's the latest from Weiss Research. Have a great trading day.